Test, test, test. Is this working? Looks like it is. I'm just creating a link for Twitter so that people know to join. Okay. All right, and then let's see if anybody shows up in chat. Okay. Welcome, welcome, welcome. Today I wanted to brainstorm some small cap ideas, and I wanted to look in healthcare because small cap healthcare has a really nice setup. Golden Cross. Let's see, we'll go to 3 months. So Golden Cross, hammer candle resting on the 50-day moving average, not overbought, and then, well, selling pressure on the MACD. It might be growing a little bit, but I think this is one of my favorite charts in the small cap sector ETFs. So let me look at consumer staples. Not nearly as attractive, although I did just write about Nomad frozen foods, but staples doesn't look nearly as good. I mean, it's cheap, but it doesn't have any positive momentum. Stationary, just slightly below the 200-day moving average. That's interesting. It's really whipsawed around a lot. I think this is a very thin market cap ETF. Let's see. On my idea list, I've got Heathrow. What is this? HROW. So Harrow. Harrow is, oh, I like the hammer candle. Put it in here, see the technicals a little better without knowing what they do. One of my subscribers told me about this company. It is, right, so you've got a longer term uptrend, short term downtrend, maybe a hammer candle getting to oversold. MACD is kind of stable. What the heck do they do, and what do their financials look like? Let me go to macro trends. Say eye care pharma. They have Flarex. They have an awful lot of eye drops. Right? So this is a pharmaceutical eye drop company. That's their products. Now this is so far outside of my competence. It's yeah, ophthalmic disease management solutions in North America. So this is an eyedropper pharmaceutical company. This is so outside of my competence. I'm going to be pretty tough to make sense of it. So I'll have to rely mostly just on the financials, and I don't like doing that at all. Okay. Can I find them on macro trends? Yes, I can. So how is the company doing? Well, I like the revenue. I mean, who doesn't like that revenue? Maybe a little cyclical, maybe a little chunky, but that's fine. How about dilution? So they're diluting. Revenue's growing, they're diluting. Maybe they're funding themselves with equity. How is their balance sheet? Liability. Long-term liabilities are falling. The current liabilities are growing. So it looks like some debt is coming due this year. The total liabilities are falling a little bit. Total assets are falling a little bit too. have to look at the debt maturities and the interest rates and what they can refinance and what they can't. Income, oh yeah, we saw the revenue was growing already, and then go ahead and look at we saw the stock price. Are they profitable? What's their EBITDA? Yeah, EBITDA is growing. And what about the price metrics? So they're still trading about 5 times sales. I don't know what the size of their market is, 25 times book. It's not cheap by any stretch of the imagination of a value stock, but now I'm going to have to look at the types of pharmaceuticals they sell, the total addressable market, if they think they can reach that market. So this might end up in the too hard bucket. So again, I'm looking at healthcare companies, and if you guys in the chat have any names for small cap healthcare names, so far what I have is Teladoc that I've already written about, and that's not a terrible chart, although this recent weakness is a little concerning, but last week was crazy. It might settle out after last week. LifeMD has a terrible chart. They're still fixing their app so that their clients can know whether or not insurance covers their branded Wegovy. So there's LifeMD, and then there's also Ars Pharmaceuticals. I think I might have to put Harrow in the too hard bucket. That is an awful chart. And there's, I had written about this one a long time ago. I haven't followed up on it recently. That's Perspective Therapeutics. And then, interestingly enough, Acacia Technologies has some leftover pharmaceutical stuff in their portfolio from their previous strategy. I don't know how much, but they've got some. And that's an interesting setup. It's trying to stay above the 200-day moving average. I'm going to go ahead and take a note of that. That Acacia Research Group is looking like it's trying to break out. It's trying very, very hard to break out. I'm going to take a quick note of that Acacia Research is trying to break out. I don't think the market thinks of this as a pharmaceutical. You have to dig pretty deep into their filings to know that they have made a bunch of private placements into some biotech startups. But those are all the pharmaceutical companies that I've looked at before. And the next question is, well, what else to find? Because again, that sector, PSCH, small cap healthcare ETF, is looking really fantastic. Like, this might be the sector I want to be a part of. What I could do is I could look at the components. PSCH, small cap healthcare ETF components. What do I find? So this is Invesco. Okay. So the percentages are here. 77 components. Wow. So 77 components in this fund. And there's a lot of stuff here. A lot of stuff that I am going to have a very hard time wrapping my circle of competency around. And yeah. Schrodinger. I did write about Schrodinger once before, and I could refresh that. That is interesting. SDGR. And they are, well, go back weekly. Yeah, it's been, I think it's been flat since I've written about them. And they are still 4 times price to sales and not profitable. But they have a pretty interesting set. I think healthcare is going to have a lot of unprofitable things priced to sales, which is not fantastic. It's just a tough sector to get your head around. I was wondering if you guys in the chat had some favorite healthcare names to look at. What else is here? Harmony. Another place I like to look is, there is a lot of biotech stuff on insider buying. Organon, I think I've seen Organon pop up a few times. So let me check out Open Insider and see if there's any insider buying. Let's see, can I go to, can I do sector? I know there's a way to do sector. All sectors. Is it in manufacturing? Is subsector. Chemicals, manufacturing, financial services. Let me try and find a biotech one and see what category this stupid website thinks it's a part of. Insider buying at Dine Brands. I like that, but I've also written about it. Insider buying at Norwegian Cruise Lines too. Omega Healthcare Investors, OHI. What are you? A healthcare REIT. That is... yeah, a 6% yield on a REIT is, you know, a little bit low octane for me. But which sector? It's in real estate investment trusts. There's frequently a lot of medical stuff in the insider buying. So this angiodynamic, surgical and medical instruments. What category is this? Manufacturing specialty surgical? Is this surgical, orthopedic, prosthetic, dental, x-ray, ophthalmic? So this manufacturing specialty instruments, if I look for purchases from a chief financial officer for the last year, what do I get? Okay. The CFO of Plus Therapeutics is buying. The CFO of whatever global innovative platforms. Angiodynamics is buying. Quanterix, whatever that is, Shoulder Innovations. Iridex. This name has popped up a lot. There's been a lot of insider buying from Iridex, and I haven't written about it yet. Emmanuel's asking what website is this. So I'm using... this website is called Open Insider. It's a little clunky, but I like it for insider purchases. And I also use macro trends just to see, easily see some of the trends for revenue. So if I look at Iridex, this company has aggressive insider buying. They've been around a while. They've been public a while, and they've had revenue for a while. What about EBITDA? They might be incinerating cash on research. Shares outstanding. Yeah, they're diluting. But I'm going to have to look at them a little bit because IRIX, the insider buying is so powerful, and from the chief financial officer and for such a long time. Wow, that stock, well, I mean, they are diluting over time, so that makes sense. Sales, the market cap is, wow, there's a tiny market cap. This is, I try and stay away from micro caps, but medical devices, what the heck do these people do? But the reason why I want to look at them is if you look at the insider buying, let's see, last 4 years search. This chief financial officer, he's averaging into it, what is this? Is this a daily purchasing plan? He's spending like $2,000 a day buying the company's stock, the chief financial officer, whoever Romeo Dizon is. And then there's the CEO. Well, that's not really a purchase, $250, that doesn't count. But whoever this chief financial officer, you figure he has all the books. He's got all the financial documents. So he either knows something or he's an idiot to throw $2,000 a day into this company. What the heck does Iridex do? So if I look here. Oh, ophthalmic medical devices. Non-incisional glaucoma treatment. Okay, that's, again, this stuff is so far outside of my circle of competence, but what I do know is small cap healthcare is really set up nicely, and the chief financial officer of this company is spending like $2,000 a day buying the company's stock. So, let's see. Is there investors? What do we know about Iridex? It's so hard to wrap my circle of competence around healthcare. It's pretty tricky. Do I have any thoughts on FMC? I haven't looked at FMC, and that investors website is loading. What is FMC? They are agricultural inputs. Is this chemicals? I mean, price to sales of a half. What do they do? So again, what I would do is I would go to FMC. What I would do is I just look at the revenue. So it looks like they're, no wonder the stock price fell recently. You know, they lost a chunk of revenue. It's been tough in agricultural inputs. I've written about a few agricultural stocks. Are they diluting? No, they're buying back stock. Okay, that's potentially interesting. And then how is their balance sheet? Are they over indebted to the eyeballs? 12 billion assets, 8 billion liabilities. How much goodwill is that? Yeah, so goodwill is the difference. 4 billion long-term liabilities, 3 billion long-term debt. And what was their EBITDA? Okay, so they might have had a goodwill write-down or something. There might have been a write-off, which usually is a buying opportunity for me. So net income. So net income is very thin, but agricultural inputs are tough right now. What do they make? Agricultural sciences. What are their products? Herbicides. Herbicides, pesticides, yeah. This is an herbicide and pesticide company with a, it's still a small cap. It's under 3 billion. So, and it really took a serious hit from 30 bucks to 14. And I would check to see if there was that goodwill write down. But right now I want to find out about investor relations on Iridex, which is not loading. There we go. Do they have an investor presentation? They have a last earnings call. They have SEC filings, annual reports, presentations. They might have an old one. Oh no, they have a new one. No presentations, just the webcast. So there are no presentations. Annual reports. They have a 2024 annual report. That is how many hundreds and hundreds of pages. Yeah, agricultural companies have been hit hard, Emmanuel, but it has less to do with the trade war. It has more to do with the agricultural cycle. A company needs to have, or a staple food needs to have a crop failure. When a staple food has a crop failure, the average price rises and everybody makes money. When a staple doesn't have a crop failure, then you're out of luck. Go back to Iridex. So it's been years, just super lucky that for the last few years, there hasn't been a crop failure in a staple crop. And until there is, the farmers aren't making any money, and the people that supply tractors and things and fertilizers and pesticides to the farmers aren't making any money. The farmers have to be flush with cash from a from a crop failure in a staple crop, and I think that has less to do with trade wars. Yeah, so this is their market cap. Whew. So this is This is super micro cap. They make these medical devices. Yeah, I can add it to the list. I might add this one to the list. So this is Iridex, and it's really this is ophthalmic medical devices. That's a tough one. That's such a tough one. But I'm really partial to companies that have insider buying from the CFO. Such a small company. Maybe I can get this guy on the phone. Romeo Dizon, LinkedIn, Iridex. Who is this guy? Departure. Wonder if I can get his email, talk to him, ask him why the... All right. No. Anyway, I put that on the short list. Let me go back to trying to find medical things that are interesting. So, NanoX Imaging. It's a small purchase. You know, Cooper Companies, Sharps Technology. What is Sharp? STSS. That's a large purchase by a chief financial officer. What is STSS? Medical instruments. The chief financial officer just dropped $250,000 in the stock. Very small revenues, small market cap. Price to book. What is STSS? What did they do? Sharps Technology. Use the Mozilla Firefox extension surmount to get past Bloomberg paywall. Huh, that's a good trick. I did not know that. I might have to look at it. Okay, Sharps Technology, a Solana acceleration company. Traditional and decentralized financial technologies. What is this? Medical instruments. How is medical instruments have to do with crypto? Did this medical instruments company become a crypto treasury? End-to-end pharma delivery innovation, drug delivery solutions, Sharps Pharma in the pipeline. What the heck does this have to do with Solana? Sharps Technology acquires over 2 million Solana tokens. This is ridiculous. Oh my god. Wow, that's pretty wild. I don't know, am I having a tough internet connection? I don't know if you guys are able to see or hear me here. That's just bizarre. Wow. Okay. So the chief financial officer of Sharps Technology, Andrew Crescenzo, he's dropped, you know, $250,000 of real world dollars at $6.41 a share a couple of months ago to get in on a Solana crypto company. And it's let me go to daily. Daily. Is this chart accurate? September. Did they do a reverse split, or they did a stock split? This is let me look at SPSS. Sharps. STSS. So what's going on with their stock price? Oh yeah, I see that. So in August, so yeah, he bought here around $6 a share, and it spiked to 10, probably on the announcement that they're going to be a crypto treasury company as well as a pharmaceutical company, and then has been crashing ever since to $3 a share. This is some wild stuff. How is the share count? Yeah, it's gone to absurd dilution. What is the financials? They've doesn't look like they've been public very long. Quarterly, is it? Okay, so they just had first revenue. Last quarter, they made their first $200,000 of revenue in their entire corporate life. And they did do that sudden dilution. Well, I'm going to add this to the list because it's ridiculous, but when I see a $250,000 purchase from the CFO, I have to take a peek. But not all CFOs are on top of their game. But I think that's just ridiculous. Did you guys have a? Did I lag out for a while, or did you guys see everything all right? My internet connection's been a little rough recently. So that's Sharp's technology. Let's see, NanoX Imaging, NNOX. Yeah, also not looking great. They're at least they at least have a few sales. What do they make? Medical devices in Israel. Pioneering medical imaging. A lot of this stuff is going to be so hard to get my circle of competence around. So hard. Let me look at... I think I want to narrow this down to larger than $10,000. Where do I do that? Share price, liquidity, minimum. What is this? That's in millions. So 10,000 would be, or no, is it, let me try this. Is that 10,000? No, that would probably make it 10 million, 0.01. This is not working. Refresh this thing. This website does not want to work for me. Okay, so how do I make this 0.1? No, 0. Can I go any smaller? No, 0.1 is the smallest. Nope, this is where I'm supposed to be doing this. In thousands, so 10,000 minimum. There we go. If I could learn how to use this website properly. Okay, so now we're cutting out all those $2,000 purchases. And Quanterix plus Therapeutics. What is Quanterix? And Novus. Where is that? Tandem Diabetes Care. $150,000 purchase for Tandem Diabetes Care. The US has a lot of diabetes, although I think Ozempic is going to be cutting in on that. TNDM. What is Tandem Diabetes Care? Wow, look at that jump. They're just up 20% yesterday. Maybe I should have done this search on Thursday instead of on the weekend. Third quarter earnings beat and record sales. This still might be early. What was the earnings beat? They reported 13 million more revenue, and they didn't lose as much money as they thought they were going to. $1 billion market cap and $1 billion of sales. So not expensive for medical devices. And then this income, a lot of that could be R&D expense. Let me look at Tandem Diabetes Care. This is kind of interesting. Still a stock price that has been completely crushed from the 2021 highs. And let me look at maybe better than a pharmaceutical Solana treasury company. I like the revenue growth. That's encouraging, right? Because the stock price had these 2021 highs, but the revenue's been growing. What about shares outstanding? And also growing, although not since 2021 really. This looks like just the about EBITDA. So the R&D coming out before everything else makes it hard. So gross profit looks okay, but gross profit is not always that great. But at least they're not funding themselves out of share dilution. What am I looking at? Assets. No, I'm looking at financials. Balance sheet. Balance sheets don't always tell you the most for these pharmaceutical companies. What's the debt situation? Debt's been sort of stable. Long-term debt is growing. Well, not growing aggressively. And assets, it's not all goodwill. It's mostly cash on hand. Cash on hand, receivables, inventory versus current. It's not bad. Not a bad little balance sheet for that company. What do they make? Oh, they do these devices. These are the wearable glucose monitor patches. It's got a little needle in there and it stabs into your flesh, but then it stays there for a month, which kind of gives me the heebie-jeebies. But now it's Bluetooth and it gives you live glucose monitoring to your devices. People that like them say that it's life-changing. So that's what Tandem does. And some people who are athletes like them even if they don't have diabetes. They just like that, always knowing what their blood sugar is for that total control and monitoring. This is a possibility. This is a real possibility. Let's see, products, Tandem Mobi system, insulin pump. Let's see, I wonder what percentage of their revenues is what product. Property, investor center. Well, at least this one is not a Solana treasury. So TNDM, earnings beat, CFO buying. There's the, let's see, let me go back to that. How do I get this? Download. Can I download this thing? Open. Cancel. What are you doing? Save. So I just want to know what percentage of their revenues is from these continuing glucose monitors versus the pumps. Anyway, I think I'll add this to the list. So for the people that are watching this live stream, thoughts on DMAC. So for people watching this live stream, small cap healthcare has an amazing technical setup, but it's very far outside of my circle of competence, and I'm trying to find the right small cap healthcare companies to add to the portfolio, but I want to avoid the whole Obamacare insurance fiasco. So I think I'm looking in the right place. I'm looking for small equipment manufacturers in the medical space which have insider buying from the chief financial officer. But before I do that, somebody asked me what are my thoughts on DMAC. What is DMAC? Diamedica Therapeutics, biotechnology. Well, I don't have any thoughts on them yet. Their charts look better than a lot of these equipment manufacturers. Pre-revenue, it's not a deal breaker, but it is hard. I'm pretty sure it's like a lot of these companies. I'm going to hit my circle of competence problem. A treatment paradigm. It's hard to sell a paradigm. Vascular diseases, innovative therapies. So what do they do? I get that they're doing something vascular, but what do they do? Is it a drug? Pipeline. Overview. Okay, yeah, it's a compound drug. And this is their clinical trials. Now, I don't like investing in this clinical trial stage type company. It's a huge gamble on whether the $1 billion they spend on getting through the FDA gets approved or not. That's not really my preferred stage of investing. There are people who specialize in it and they get really good at it. And so it's not a space for generalists. So I'm going to leave that be. I did like Tandem Diabetes Care. That one was very interesting. Novocure. What the heck is Novocure? NVCR. Novocure. Healthcare medical devices. The graph looks like all the other medical device graphs. Price to sales is only around 2. NVCR. Let me go to macro trends. NVCR. Share count has also been growing, but I've seen worse. Financials, balance sheet. Their debt. Wow, it's all current. It's $750 million due this year. It's been that way for 5 quarters now. They must be refinancing short term. And then assets. Their assets are. Their assets cash. I mean, they've got $1 billion in cash. So I guess if you've got $1 billion in cash on hands, having $750 million of current liabilities isn't terrible. So what does Novocure do with medical devices in the United Kingdom? Let's see. Extend survival on aggressive forms of cancer. Our therapy, our pipeline. Make your next move electric. So they're using electric fields to kill cancer cells. Don't know if that works. This is going to be one of those outside of my circle of competence pretty hard. I mean, I understand Bluetooth continuous glucose monitoring. Let's see. Tumor treating fields. So they have something approved, things in the pipeline for preclinical trials. This one's a little tough for me, treating cancer with electric fields. Tumor treating fields, targeting the electrical properties of cancer cells. So you wear this device, it generates an electronic field on the tumor for, I assume, a long period of time. But if they're already approved and reimbursed by health insurance, then that provides some amount of stability there. Oh yeah, so their R&D, if I go to, what's that macro trend? If I go to their income statement and I look at their annual, so for 2024, yeah, you take this R&D out, and let's see, their operating income. In traditional boring industries, the capex is spent after EBITDA. In this one, the R&D is spent before EBITDA. So if they spent $209 million there, just on the product itself, it looks like they're, even minorly profitable, which is, pretty fantastic. So that's having circle of competence problems, but I'm warming up to it. This is called NVCR Novocure. I'll add it to the list. NVCR. I mean, they have 600 million of revenue. They've got to be doing something. And to do that in healthcare, that means some kind of insurance stuff is approving it. Hoping AC/DC comes through in the morning. Well, regarding AC/DC coming through in the morning, the frac fleet count, I think, bottomed in the first month of the quarter. So there's going to be positive acceleration, but off of a very low base. So I don't know. It might have some really negative year-over-year signs. So there's so Tandem Diabetes, Novocure, Illumina. What's the kind of a market cap does Illumina have? ILMN. ILMN. Can't type today. Illumina, what do they do? Diagnostics and research. $18 billion company. I mean, the that chart coming off of the 2000, I mean, it's I typically stay away from mid caps like this, especially mid caps that they don't even seem that cheap. But what is ILMN? Illumina. Yeah, so they actually they've been pretty much flat on revenues. So there is a big difference in value between a growing company and a flat company. And then share count. It's loading, loading, loading. It's thinking about. Yeah, so share count, it looks like they did finally start some buybacks 2 quarters ago. But having a growing share count on flat revenue is not great. So it looks like they just announced a buyback and then no idea what they actually do. Genome and methylome in a single assay. Okay. Improving human health with genomics, can't wait. Yeah, the genomic stuff, I know Kathy Wood is super big into that. I don't know if there's going to be a, I mean, if the healthcare sector gets hot again, healthcare has been kind of dead from the rising interest rates and then the RFK Jr. feels. If healthcare pops from here, a lot of this stuff can get frothy again. I just don't know which part I want to be in. It's so hard to wrap my circle of competence around any of this stuff. This is really an uphill battle. I like that the CFO spent $500,000 buying the company. Neuro One Medical Technologies, NMTC. What is NMTC? The same chart as all the rest, right? Peaked in 2001. It's been a slide ever since. This is a micro cap, but a micro cap with revenue. That's at least a little interesting. Sometimes when it's too small, it doesn't show up on macro trends. NMTC. Nope, this is here. Well, the revenues are growing. That's nice. Shares out. Okay, so they're doing, they're funding themselves with equity. All right, and let me look at the financials. What does this company do? Flexible thin film electrode technology will advance a new era in neuroscience. Minimally invasive high definition electrodes. So they're going to stimulate your brain. The next frontier of neurology. Minimally invasive brain. Yeah, it looks like that. They're doing minimally invasive brain electronic stimulation. Some of the psychology studies, those are crazy. You know, you like give a mouse a button that stimulates the pleasure center of his brain. He just pushes that button until he starves to death. I'm sure there's some, you know, genuine medical use for it, but this is a tiny micro cap with a CFO who just bought $100,000 worth of stock. I mean, significantly increased his ownership stake. He bought it, and their revenue is growing. There's my Perspective Therapeutics that I wrote about, and the CFO just bought in again. So I really like this one. It's a cancer treatment, and yeah, it's only insider buying, and they're just insider buying all the way. Oh, this is all the way back to April already. So it's not new insider buying, but the CEO and the CFO are both in on it, all buying. Let's see. So I like that one. Inogen, Erasure. What is Erasure Technologies? $200,000 purchase by the CFO. Erasure, OSUR. Almost the same chart. 2021 high, and then a slide all the way down. 171 million market cap, but almost the same amount in sales. Negative enterprise value. Let's see. What did they do? OSUR. Orasure. Understanding coding and billing for sexually transmitted diseases. Sherlock Biosciences. So they distribute rapid diagnostic tests and sample collection and stabilization devices. Okay. For syphilis, HIV, and HCV. So they have a rapid HIV test. Okay, and then, oh, that's interesting. So they must have gotten some huge revenue boost, and then it's collapsed ever since. That is interesting. Shares outstanding, at least they're not printing. Go back to revenue. If the chief financial officer is buying into a company where the revenue looks like that, figure he must know something. It's not really the sort of thing that I'm super eager to run out and buy. I might look at, so there's also Schrodinger. There's also CATX. Let's see. What are you guys who are watching this? What do you think of these? I mean, again, the promise is that small cap healthcare is one of the best looking charts out there. But digging through this stuff, you get so many problems trying to get through the circle of competence. What is this? Trisilis, TLSI. None of this stuff is jumping out to me as something that I, understand well enough to appreciate how good it is. This one has only been public since after that last peak, and it's, stock price has been, although I do like that hammer candle on Friday. A lot of things had a hammer candle on Friday. They do have revenue, so they're not pre-revenue. Trisilis. TLSI. What does the company even do? Oh yeah, so revenue is just starting to ramp up, and shares outstanding is also ramping up, funding themselves with equity dilution. So that's not ideal. Yeah, they've only got 3/4 of revenue so far, or something like that. Total liabilities, $50 million of long-term liabilities, $30 million of debt. On a 200 million market cap company, it's not terrible. What do you do? Solid tumors, innovative delivery technology, standard of care therapies, and investigational immunotherapy. So, a pressure-enabled drug delivery. See their platform in action. So if you have a tumor in your liver, they're going to inject the drugs directly onto the tumor. Anyway, yeah, it's an interesting circle of competence. I mean, some of these things might be fantastic, and I really do look at CFO buying really strongly, but it's just so hard to overcome that circle of competence problem. What are some of these companies? Cytosorbents, Avita Medical, Heartbeam, Seat, Beat, Heartbeam. I'll look at some of this stuff. BEAT. Healthcare, Health Information Services, Heartbeam. $56 million company, pre-revenue. Not my favorite. Cable-free ECG. Well, that's interesting. This is a medical device. Yeah, I mean, this is a. Have I looked at CODI? I will take a look at CODI. I think you mentioned that in the comments on one of my conglomerates, Compass Diversified. Well, that is a beaten down chart for a nice price to sales ratio. This is definitely looking a lot more like the sort of thing I'm usually into. CODI. Cody, what is it called? Compass Diversified. No, it's not gonna. No, okay. So stock screener. Sometimes Macro Trends does not want to give me the. Let's see. Sometimes it doesn't want to give me the name. CODI. Hold on. CODI. LMNOP, CODI. Coda, Codex. No, it's not in Macro Trends. I wonder why. I wonder what exchanges listed it on to not give me Macro Trends data. Oh well. I can always look at the financials here, but usually it just cuts off the data a little shorter. So I can get balance sheet, quarterly, assets versus liabilities, 2 billion long-term debt, income statement, revenue is, let's see, annual. Revenue's not bad. I just wish I could see back a few more years, but FinViz wants me to pay for that. Net income has been negative. That's not new. Interest expense is about the same. Operating income is higher than 2023. What is Compass Diversified? High growth middle market companies. Is this a business development company? Let's see, in companies. Current holdings, Velocity Outdoor, Sterno. That's the those little cans of a flammable gel for what is those chafing dishes at parties? Primaloft, Lugano. Is that a fashion? Dialed in the Honeypot Company. Yeah, it looks like this is like a public private equity firm. How do they return capital to shareholders? Do they not? They have paid a dividend in the past. It doesn't look like they're predicted to pay a dividend. There's no earnings since May. Investor relations. Yeah, I can put this on the list. This is interesting. Some of these conglomerates, there's value there if you can dig in. So I'll look at Cody. It's interesting. What was the market cap again? 400 million with 2 billion of debt on top of it. To have, they don't have the net income, but I'd have to look at the financials a little closer, figuring out how the money's moving around in the company. Let's see. No presentation, just a 2021 annual report. Yeah, it looks like it's going to have some digging in through it. Yeah, this is, let me also add the COO. Let's see if this changes anything. Chief Operating, I like CFOs better. What about Chief Operating Officers? They're way less in. So Tandem, there we go, Tandem again. Lakeland Industries, I wrote about them. They were the fire equipment company. SS Innovations, Infuse System, Kids Orthopedics, and Cooper Companies. What is a COO? Some of those names are on the list. That means the Chief Operating Officer and the Chief Financial Officer were both buying. Yeah, that is a beaten down chart just since last fall. Not a small cap, but also still profitable. Yeah, this is kind of a low octane mid cap. Let me see. Kids Orthopedics. So this one is a small cap. It is very beaten down. What do they do? Clubfoot. What is it? Okay, so they're deformity correction, trauma, sports medicine, scoliosis. That's interesting. Interesting. Let me go to kids. Well, I like the revenue growth. Yeah, there's some dilution there. It's not as bad as a lot of these biotech companies. Quarterly balance sheet. Only about 100 million of long-term debt, and they are, well, let's see. What about their income statement? So they're, let's see, revenue, cost, gross profit, SG&A. Yeah, I mean, they're just slightly not profitable. And then it doesn't, I mean, they are growing. It doesn't appear they have any seasonality in their numbers. So I could put this on the list. It's not maybe the most exciting one. I don't know what it is about these medical companies having no desire to turn profitable unless they just have to keep spending money on R&D. That was kids. Yeah, I like Tandem Diabetes a little bit more. So INFU, Infuse Systems. That has one of the least worst charts, and it has a positive net income and not an outrageous price to sales metric. And this is from the 2021 high, so still has a lot of room to go. So this had a pop on earnings in August when they tripled their earnings per share estimate. That might have been a one-off. This one is, yeah, they were much closer to their estimate on the last earnings call. So, but they're profitable. So what did they do? INFU. No, Infuse System. They're not showing up in macro trends. Some of the smaller companies don't. Durable medical equipment. So they have whatever the infusion pump is. What is an infusion pump? Okay, I'm still trying to figure out what's an infusion pump. Okay. So is it for pumping drugs into your symptoms, for intravenous drug pumps? Let's see, and it's not showing up in macro trends, so I'll just check there. But they are recently profitable. So what is their? That is not aggressive revenue growth over the last couple years, but they have been. Well, that is pretty good. It's 5 times the net income over that time period because they're reaching scale. Yeah, it's not bad. Not bad. And their shareholder equity is even growing. I'll be darned. The price isn't, it's not a bargain, but it's not outrageous. So the question is just how much growth do they have in them? And their growth is on the slow side, so not super exciting, but one of the lower risk ones. We'll see. Stanley Druckenmiller just bought VKTX for insulin. VKTX. Oh, Viking Therapeutics. I have seen that name. This has been sort of a Twitter high flyer sort of name. Still pretty far below the highs of last year. 4 billion market cap pre-revenue. Ooh, that is painful. I don't really need to look at it because there's no revenue. So what is there to look at in no revenue? But how about shares outstanding? Well, they're diluting to fund themselves. How about balance sheet? Balance sheet, not so much debt. And they still have 900 million in cash on hand. Well, that was last year was the quarter. 700 million cash on hands, but no debt. So Viking Therapeutics, what do they do? Metabolic and endocrine disorders. Pipeline. Novel dual agonists of the glucagon-like peptide. So it's a GLP-1 company. So this is, yeah, GLP-1s are hot and popular. Let's see. They have a better weight loss drug than Novo Nordisk. And now, I did have a hot tip on a GLP-1 drug, GPCR. Structure Therapeutics, and yeah, that's doubled since August on negative earnings. 1.89 billion for pre-revenue. What's the Twitter comments? Let's see. It's being compared with Viking Therapeutics. And this is about, so Structure Therapeutics has an oral GLP-1. And the idea is that the next step of the GLP-1 things is going to be people don't like needles, they don't want the injections, they want to be able to take a pill. So it's who's got the oral GLP-1s. But and the next question is, at what price is the large company is going to pay to acquire them. And I don't have any insight on that. If they have to pay, if it's at 2 billion market cap and they have to pay 3 billion for it, then yeah, you could have a 50% gain pretty quickly. But I don't really have a good way of valuing, which oral GLP-1 is going to be superior and at what price they'll get taken out at. So you're buying a pre-revenue drug company, and there are competitors. Let's see. The financial part. So Celsius reported a one-time expense for distribution, but Pepsi is covering the expense. Could take a look at that. So I take it sold off on the news. It had an earnings call. So yeah, the earnings came out negative from a one-time expense. For that, you have to dig into the footnotes of it. It's still a 5 times price to sales drink company with a lot of competitors. I mean, I don't think they have any sort of, there's just so many energy drinks out on the market, and you never know what young people are. I mean, when I was a professor, all my students were drinking Celsius, but in 2 years they could all be drinking something else. You have no idea. So what you're saying might be true, that this earnings was that maybe Pepsi is going to cover the cost, but I still don't see why they should be trading at 5 times price to sales when the next energy drink company is going to come along and compete with them. Maybe Celsius will be durable for the long run, but I'm not an energy drink enthusiast. What other? Did I have any other healthcare names here? I don't think I know very much about healthcare. Yeah, I don't have a lot of things on my list. SSII. Right now, if I had to guess, I think that tandem continuous glucose monitor is the good one. Hammer candle at the bottom of its range. Medical devices, flat. This even really didn't catch the 2021 rally. I think this is, yeah, 1.3 billion, 33 million of revenue. At least they have some revenue. What do you make, SSII? SS Innovations. What is this? Robotic surgery. That's very Cathie Wood-esque. I mean, I bet it's I bet it is coming in the future. I bet it will displace a lot of surgeons. What was the insider buying on SSII? That was the chief operating officer. Well, $30,000 from the chief operating officer of the Americas is not huge. The chairman of the board is selling, but he owns a lot. Well, he sold it. It looks like he sold it to a director, so that was less indicative that the CEO doesn't believe it anymore. Sometime, but he is selling. He's selling $1 million here or $3 million there. But the chief operating officer of the Americas keeps buying. Barry Cohen is putting in a couple $1,000 every month or so. That's a little bit encouraging, but this is a very Cathie Wood type stock. SIII. I think my favorite out of the whole batch is this tandem continuous glucose monitoring. If I had to pick a favorite out of this whole group, it would be tandem. They just beat. They just lost slightly less money and had a little bit higher revenue. So it's only up 50% off the August lows and still down significantly on the year. And still, I mean, that could be a 10 bagger to get to the 2021 highs. Yeah, I think I really like them. I like the revenue growth. I the dilution is very modest compared to other companies, and yeah, this is one they do have R&D spending. Let's see, quarterly. Where was the R&D spending like $50 million a quarter on R&D, which is they're almost break even except for R&D expense. But I do actually like Tandem a good bit. For 1 times price to sales, all these other companies trading at 4 and 5 times price to sales. I think that could get frothy. I mean, it's hard for me to think of it as deep value, but I'll move that to the top of my list. Although, yeah, there are some interesting names here. I'm not sure. Yeah, there's just such a wall of circle of competence to overcome to invest in healthcare stocks, but that is the best sector set up right now, is small cap healthcare. Maybe consumer discretionary. I think that's early. Energy, I've got plenty of energy. I'm overweight energy already. Consumer discretionary, consumer staples has been crashing. Let's see. Peter Thiel owns PEPG, Iova, and Dawn. Look at PEPG. Is that peptides? Something I don't know anything about. PepGen Biotechnology. Let's see, what do they do? They are pre-revenue 300 million. Disease-modifying therapies. So it's a genetic, targeting genetic diseases. Yeah, that one's tough. Tough for the circle of competence. Iova, I-O-V-A. Iovance Farm Biotherapeutics. So it's definitely bouncing along the bottom. Almost $1 billion market cap. Wow. But they do have some revenue. What do they do? Treating cancer. So this is another immune system, teach the immune system to attack cancer. There's a lot of these cancer. Yeah, there is a lot of these cancer startups. The one I have is CATX, Perspective Therapeutics. Market cap is smaller, and they do have some tiny amount of sales. I don't, let's see, when did they get first? I don't see the earnings call information here. In Dawn, D-A-W-N, Day One Biopharmaceuticals. A recent pop. The market liked something they did. $1 billion, and they have some revenue. What do they do? Cancer therapies for children. What is their... So what are they doing? Oral brain penetrant type 2 kinase inhibitor for brain tumors. Yeah, a lot of these are cancer treatments, and I mean, one possibility is take the basket approach. The thing is, if you buy 5 of them and then 4 of them go to 0 and one of them 5x's, you've kind of broken even. SRPT. Now, White Tiger is telling me that Martin Shkreli is buying Sarepta Therapeutics. Now, that is his circle of competence, and he is very good at pharmaceuticals. I would take Martin Shkreli buying, to be at least as good as a CFO buying. Let me see if there is any SRPT. Are insiders, do insiders feel the way that Shkreli is buying? No, insiders are only selling, except for one director who bought last year. Bought $5 million last year. But no, insiders don't feel the same way as Shkreli. That is a pretty big collapse. 1.8 billion, but they're actually less than 1 times price to sales. SRPT. I'm going to add that one to the list because, I mean, I like Peter Thiel as a tech investor, but Shkreli knows pharmaceuticals very well. That's his area of expertise. So if he's buying, I mean, I wouldn't forego my own judgment, but I would add it. Well, that's a nice revenue chart. I'll take that. I'll take that any day. What about shares outstanding? Yeah, that's kind of standard. Biotech is diluting, so not great. They have over $1 billion in debt, 900 million in current liabilities, almost $2 billion in cash and receivables and, well, inventory they have to sell, but not a bad balance sheet for biotech. Not terrible. What do they do? Oh, this is the rare disease one. 7,000 rare diseases. That really is Shkreli's. Yeah, he went to jail for that, right? Buying a rare disease company and raising the price 50 times, whatever he did. He knows rare diseases. Gene therapy, FDA approved treatments. Muscular dystrophy. So this is, genetic treatments for muscular dystrophy. Yeah, I mean, again, I can't just suspend my judgment just because Shkreli is buying it, but it is a very good one. Yeah. Okay, so where am I on the list? So Sarepta Therapeutics is interesting with Shkreli buying. Cody, that's the more research needed on the conglomerate. ACTG. So I'm going to have to put this on my next weekly technicals video because it's trying to break out above the 200-day. Let me zoom in there. Again, I don't think the market thinks of it as a healthcare stock. So you had one day where the 200-day moving average acted as a little bit of a price support, and then if it gets rejected off the 200-day, it could be pretty brutal. But that's with some aggressive buying on Friday. Acacia Research might really be trying to break out. Now they have pharmaceuticals, but again, it's a small part of their business. You have to read the footnotes to find it. But they have their old strategy before the current strategy was to invest in biotech startups, and they even have capital calls because of it. So if they hit a threshold in their FDA approval process, then they can have capital called away to put into the biotech company, which just happened recently for one of their things. But I don't think the market thinks of it as a biotech company. And then there was Iridex. This is a micro cap, but I really like the constant buying by the CFO. I'm going to have to look at more of that. I think the top of my list is Tandem. That's the continuous glucose monitor. And then, what was SPSS? No SPSS. What the heck was SPSS? No, okay. There was something. STSS, Sharps Technology. not TSS. Was this the, oh, yes, this is the one with the medical company that's now a Solana treasury. If you can't beat them, join them. Is that what you should do, is invest in Solana treasuries? ABXX, Abex Exchange. They built their own technology stack. It's an exchange and clearing house. Okay, so Jack, I'm looking at biotech right now, but I will ABXX. I'll add it to the list. How long has this live stream been going? I might have to call it quits pretty soon. ABXX is too small for FinViz, so I'll have to look at that another time. So STSS is the Solana Treasury Biotech, Novocure, Schrodinger's, CatX, Kids, InfuSystem. Yeah, I think the best thing I found today was Tandem. I think that's what I'm liking the best. TNDM. Continuous glucose multiples, room to be a 8x from here. Let's look at TNDM. The price ratios. Price to sales. So revenue per share is growing. That's fantastic. And then price to sales has been collapsing. So they're past, I mean, I don't expect it to go back to 15 times price to sales, but yeah, to have revenue per share growing and for it to be so far below past multiples, price to book value per share is shrinking. That's not ideal. That's also maybe not a great one. Price to earnings, their earnings are negative, so that doesn't make any nonsense. Free cash flow is going to be negative. But yeah, market cap from $1 billion to $8 billion. So, I mean, best case scenario, it's an 8x if the market starts to like it again. But I'm not against that revenue chart, and I understand the product. I can make sense of it, right? I know people that swear by these things. These I want to see how long their patents are good for, but these continuous glucose monitors, some people really find it is, you know, significantly impacts their life. It's a Bluetooth connected to your phone, and then you can just see what your blood sugar is all day. So, you know, if you have a slice of cheesecake for dessert and you see your blood sugar is high, you might say no to that second piece and live a healthier lifestyle. But, well, again, they had, so that was my exploration of small cap health, because the setup on small cap health is really, really attractive. But I have a huge problem overcoming circle of competence on small cap health. I was in here in the this is that small cap health ETF, looking at some of these components, seeing what is in this ETF. There's 77 names, and there's a lot of things here. I might have to spend some more time going through here and seeing, because I think this ETF is, as far as the small cap sectors go, this one is the best chart out of all the small cap sectors right now. Well, Eric Jackson says Sana is a 100-bagger. Eric Jackson is not my favorite, but I don't hate him. I'd probably rather take Shkreli's word for it than Eric Jackson's. For a 100-bagger, that has to become a 100 billion market cap. It's hard for something already that big to be a 100-bagger, especially a pre-revenue company. What's their technology? Engineered cells as medicine. Our science. To replace any cell in the body. how to modulate genes. So the field is in its infancy. Imagine a world in which it is possible to replace pancreatic cells in patients with type 1 diabetes. Differentiating stem cells into clinically needed cell types has the potential to transform the way we treat a host of diseases. Cell replacement therapy offers the opportunity to turn this vision into a reality. To make the cells at scale and then engraft them and have them persist. Yeah, this is pretty far out in the future. This is very Cathie Wood-esque, just like that robotic surgery company. So if I was a Cathie Wood type investor trying to invest in the future, then that would be how I would think of this company. As far as a value investor, the business they have today, there's not much of a business today to see it as undervalued. That one's a tough one for me. Let's see. So yeah, what was that Cathie Wood Robotics one? I've lost track. I've looked at too many names today. I still think Tandem Diabetes Care is this is the only one that I could wrap my value investor brain around well enough to do a write-up of it. And I think I probably will. I think it is worth a write-up. So probably expect a write-up on Tandem Diabetes Care next week. Yeah, healthcare is just such a tough hill to climb for people that are outside that industry. All right, well, thank you guys for stopping by and joining me on the live stream. I really appreciate it. And I'll be maybe trying to do one of these every week. I do my what am I buying this week paywalled video on Substack, but I'm trying to do a little bit more live stream.